we're going to talk about the functions of the security markets. And of course, you talk about securities investments, you need to have probably one of the world's champion investors in almost the last century, and even into this one is Warren Buffett. Really, Warren Buffett is CEO of Berkshire Hathaway. Just check out their stock. The stock is almost $500,000 a share for one share of stock. So with that, it's a matter of talk about brilliant investing strategy. Him and Charlie Munger over the years really have done a spectacular job. I encourage you to have a chance, read up on some of the people that we talk about that really are the heroes of the business world, and certainly Warren Buffett really is one of those. When you look at the securities market, you're looking at really a marketplace primarily consisting of stocks and bonds and some variations of them. We'll talk about how they change a little bit later, but they're going to assist two different aspects. The business needs to make money in the aspect of trying to find money to sit down and grow its products, grow its business overall. So it provides an opportunity by selling stocks and bonds to the public to buy securities, and that way they can make money by having an investment, take some pride in it, and also make some money by the ups and downs of the company that they're buying stocks and bonds in. You're going to find a lot of different things out there to research on it, because if you're going to get serious about getting involved in securities, you're going to sit down and have some research material. I recommend always the Wall Street Journal is number one. Motley Fools, they aren't any fools at all. They're brilliant. They have a lot of really good tips as to what they have about messages in the stock market. Be careful about watching their tips, just like everybody else. They're there to sit down and help you and help themselves. It's called capitalism. Okay, but that said, they're excellent. The Economist, you have a whole series of different things, and the market is full of really good, useful information. And you should study it before you get involved in it too much. Securities markets, the primary markets, they handle the sale of new securities. In the stock world, we call them IPOs, or initial public offerings. Pay attention. It's important that you know it for this class, but also, you know what, when you're talking business, hey, I heard about so-and-so's going to do an IPO. Oh yeah, they are. And you can actually know what they're talking about. An IPO is the primary market that a company comes out and they actually sell stock to a group of investors. Let me shift over here real quickly. They have the two groups you're looking to are investment bankers and institutional investors. If you have a giant retirement fund, they have a lot of money sitting there built up by the billions, a lot of them. So they're ones that they play in the markets. Hey, did you hear about so-and-so? They have an IPO coming up. Oh yeah, I want to get a piece of that action. Let's invest $50 million into that one over here, and let's buy 57 million over here. They have that kind of power because they have that kind of money. Also, investment bankers, they know other people like you and me who are wealthy beyond all belief. That's why we're taking this class. Okay. And so we're going to sit down and say, hey, my investment banker just called me up. He wants $22 million. Do we got that in our checking account? I had to go check with my wife, just in case you wanted to know. Okay, to make sure they had that kind of money. Well, there are people with that kind of money. An investment banker knows them, but they want to line up a series of investors for this thing on the primary market called an initial public offering, because the company is going to come out, they're going to want to sell stock. I want to sell stock in this company. We make the world's greatest widgets, and we need to sit down. Our market's expanded, so we're going to be selling widgets, and we want to sell this for $25 a share. If we sell it for $25 a share, we sell 10 million. We're going to have an awful lot of money to sit down and expand our operations really in overseas markets. So they print up all kinds of brochures. We call it a prospectus. They tell everybody all about it. This is what it's all about. And they check in with the Securities Exchange Commission. We'll talk about them in just a little bit. But they go into the primary market, which is the only time the company will make money selling stock. Pay attention to that. The company doesn't make a dime after it sells the stock. It only makes it at the initial public offering. Pay attention, because it's a big deal. And then if you get to play in that game of the initial public offering, you get to turn around the next day and say, hey, I'm going to go to the secondary market. I'm going to sell this on the New York Stock Exchange. And you start selling it all, and the price goes up, and you become wealthy. You give 10% of all your wealth to the Irvine Valley College Foundation. Good plan. Well, maybe not so much. Anyway, but that being said, you go ahead, and the secondary market, where the average person can sell it, and we buy and sell and we trade on that market. Now, when you're buying a share of stock, you're also buying a share of ownership in the company. So you get the right to vote in it. We'll talk about that in just a little bit as well. But primary markets is where you sell your IPOs, and that's where you go to the institutional investors, the investment bankers. They buy the stock and they sell it in the secondary market in the place called the stock exchange. In the stock exchange, you turn around and you go and you sell it. You'll see if you go in the stock exchange, probably the one most used is actually over the counter market, where you have a lot of stocks that are not the big shooters, not the big giant corporations, but the average smaller companies, the mid-sized companies that are out there. And a lot of the NASDAQ is the nationwide electronic system where you track the over-the-counter trades. So over the counter market, the NASDAQ tracks that. That is actually the huge, giant volume one. But if you want to sit down and go to the big shooters, the heavy hitters, what we call the blue chip stocks, that's where the people that have the serious amounts of money sell their products over here because they buy nothing but blue chips because that's who they are. Okay, so on the stock exchange, you'll see that you can buy a huge number of stocks there as well. So you'll have the more expensive and higher price stocks on the NYSE. Okay, but you also see some other ones in just a minute. The aspect of the once upon a time on the right side, that is how the New York Stock Exchange used to look. People would spend tens of thousands of dollars on different vests to give them the right to go onto the floor to buy, sell, and trade. They would actually buy and sell by sign language, yelling, screaming. They would give sign languages and give different fingers, not the fingers you're thinking of, but different fingers to show what they're buying, selling, half or whatever it came down to. It was nothing but total chaos, total adrenaline rush, total success, total failure, all in the same day. Nowadays, the NYSE looks like on the left-hand side, it's almost nobody's there because almost all your transactions are digital and by computer now. So you'll see that aspect of it. Some of the world top stock exchanges, NYSE, New York Stock Exchange is probably the world's biggest. The NASDAQ is the second biggest. Keep in mind, the NASDAQ really is the over-the-counter trade, really, and it's huge. It's actually gigantic with a lot of stock there. You also have Japan, London, Shanghai, Hong Kong. You are not a cool country unless you have really the stock exchange and at least a McDonald's or Arby's or whatever you have over there. Anything that's American. I'm only just saying that a little bit, but the reality of the stock exchange, that really is the defining aspect of we embrace some portion of capitalism because they're encouraging their citizens to buy stock in companies to sit down there and get capital for them. And it really is a positive thing for a country, in my opinion, if a country has a stock exchange. Some of the exchanges out there, stocks and bonds. Okay, when you have a stock, you're buying a share of interest and ownership of the company. And companies sell them through initial public offerings. We call them IPOs. And bonds, we also sell bonds. Bonds are actually debt. We're going to talk a lot more detail about that later on. That also is a security. So your security market is primarily stocks and bonds. IPOs are initial public offerings. OTC stands for over the counter. The NASDAQ sells the over-the-counter stock. The New York Stock Exchange and other exchanges like that will sell the higher level stocks. And institutional investors, as well as different kind of investment bankers, they play a huge role in selling what we call initial public offerings for a primary market, where they turn around and sell the stock itself on the secondary market as well. Your stock exchange is a huge driver in most businesses as to how they can get capital to operate. Take care.